Hi there, Miranda Alt here with Keller Williams Success Real Estate and the Miranda Alt team with your Monday market update for Monday, September 26th, 2022. Thanks so much for watching. A quick look at your Montgomery County numbers for the last 7 days. We had 151 new listings. We have 164 under contract, 129 closed sales, 55 price changes, 3 expired, and 26 currently on the private network. Now, as opposed to last year, how does that compare? Last year, we had 184 new listings, 186 go under contract, 165 closed, 2 expired, and 47 on the private network. So it actually isn't that different. We have about 30 less homes listed this week than we did this week last year. We have about 20 less homes go under contract. So actually, we have a bigger discrepancy this year with 151 new and 164 going under contract. We have more going under contract as compared to new listings this year than we did last year, continuing our persistent problem of low inventory. We have far less closed sales, 129 closed sales versus 165. And that we knew was going to happen because, of course, 2021 was the best year we had ever had. So obviously 2022 to be less is not shocking. We've been talking a lot recently about the fact that the National Association of Realtors predicted that we would sell 1 million less homes nationwide this year than we did last year. Again, comparing it to 2021, which was the best year we had ever had. We still have, similar expired listings, and we have a lot less on the private network. So we only have 26 on the private network right now, whereas we had 47 this time last year. So we definitely have an inventory issue. We do not have enough homes to meet the demand. So a lot of people are talking about, of course, everyone's talking about interest rates. That's on everybody's minds as the stock market is responding to the federal government trying to fight inflation. Interest rates are going up. We'll talk about that more in a second, but we still don't have enough inventory, bottom line. So no matter what's happening with interest rates, no matter what's happening with, the economy and stocks and all of those things, we still have less homes than meet demand. So supply and demand, if we have low supply, high demand, prices are going to continue to go up. We are seeing prices come down over the last 5 weeks, but they are still higher than they were last year. So let me get to some of those analysis. Right now, this is all according to the MLS, the MRED, which is the Midwest region's multiple listing service. The number of closed sales have been down, lower than last year every single week this year than last year. So that is, again, along the lines of what the National Association of Realtors is predicting, that we will sell 1 million less homes nationwide than we did last year. So we are going to have less closed sales. Another thing to look at, the discrepancy between last year and this year in listings under contract was not as stark until the last 2 weeks, where we are seeing significantly less homes going under contract as compared to last year. Now, part of that might be weather-wise. The weather does dictate a lot of what happens. We did all of a sudden go into fall last week. It was like a switch flipped, and all of a sudden it is fall officially here. So some of that is probably a response to that. It's also a response to the fact that, we still have COVID. We're still dealing with COVID, but it's still not as much as it was last year, and certainly not as much as the year before that. So we are seeing life getting back to normal. So it is normal that in September we see less sales than we did over the summer as people are getting back to their life. Sports are happening again. I know I've been trying to set up some just social things, and it's been tough with sports schedules. So I think we're seeing the return of normal life affecting our real estate sales a little bit here, where we're seeing a larger discrepancy in number of homes going under contract this year as opposed to last year. New listings are about the same as last week, but still significantly less than last year. Rental listings still are the lowest they've seen since March, with the exception of 4th of July. So while people are talking about how much more expensive it's getting to get a loan, think about if you're a renter. If you're a renter, you're paying 100% interest rate. You are not paying paying down any principal. You don't own anything. So, rents with them becoming more expensive, that is going to still affect things as well. So rental listings are the lowest they've been. Showings are way down, 2.9% lower than they were the first of the year. So they've been pretty consistent. They've been behind last year pretty consistently since April, but that's more due to low inventory than it is anything else. We do have less inventory, so there are not as many showings happening, but we are very down right now in showings. The only metric that's been up from last year consistently is price. Like we were talking about before, well, prices have been tapering lower each week since the beginning of August, and far lower than we saw the peak of January, or the first week of June. First week of June, we saw those sky high prices, and they've been tapering down since the first week of August because prices were still very high through the beginning of August, and each week they've gotten progressively less, and there is no exception this week. However, they're still higher than last year, pretty significantly. The median sales price for this week last year was $268,000. Now it's $275,000. The average was $326,000, and now it's $346,000. So sellers still have more equity in their homes than they did last year by about 6%, which is still more than the average. 3% is the average increase that we expect to see each year, and we're at 6%. So prices are still higher than they were. Rents are still up 8%. So once again, we're talking about supply and demand. We're talking about demand is still high, guys, because rental prices have gone so high. The average last year, or the median last year, was $1,700 a month for rent. Now it's $1,850. That's pretty significant for somebody who's renting. And of course, mortgage rates are still up again, and they are likely to go up yet again this week. So prepare for that as it responds to the the mortgage-backed securities are trading at a much lower level, which means those interest rates have to go up. And of course, that's as a response to what's going on in the stock market, which of course is a response to the federal government raising the prime rate and trying to fight inflation. Now, when can we expect some of this to get better? According to Mortgage-Backed Securities Highway, we are expecting that within about 6 months, we might see a relief. We might see some of those numbers and reports on inflation coming back in a more positive light, which might allow interest rates to come down. So if you are a buyer right now, remember that though the mortgage rates are high, you can refinance. We live in the United States, which is wonderful. We are one of the only countries that allows you to refinance at any point in time. So if those mortgage rates come down in 6 months, you can refinance and take advantage of that, which will be great. So we like to go by the old saying of marry the house, date the rate. So buy the house that you love, and you are going to have that rate for a very short time, and then you're going to change and you're going to refinance and get a better rate when it becomes available. So that's a quick look at your housing market update for Monday, September 26th, 2022. I'm Miranda Alt with Keller Williams Success Real Estate. Thank you so much for watching. Hope you have a great rest of your week. Bye-bye.